From the given data, compute the taxable income for assessment year 12-13 and 13-14. You're given some numbers about financial year 11-12 and 12-13. Now obviously, because this is financial year 11-12 and 12-13, this means it is assessment year 12-13 and 13-14. Right? So you're given the business income prior to depreciation, 1,80,000. You are given depreciation of 1,60,000 and 30,000, and you are given income from house property 50,000 each for these 2 years. So basically, when we compute our taxable income, this question is more to do with how do you deal with unabsorbed depreciation. So let's say for assessment year 2012-13, we will have profits and gains of business and profession, which is 1 lakh. From this, we will reduce depreciation. Now, depreciation is 1,60,000. Okay. So the maximum which can be absorbed here is 1 lakh. Right. The balance 60,000 can be easily set off against income from house property. This we will learn subsequently. Okay. Regarding the set off and carry forward. So we have income from house property, which is 50,000. Unabsorbed depreciation can be set off against income from house property. So we will reduce depreciation 50,000. It's actually not unabsorbed depreciation. I'm sorry, I have used the wrong word. It's depreciation for the current year. So income is 0, income is 0. But if you notice, out of 1,60,000 of depreciation, we have been able to absorb how much? 1,10,000, which means depreciation of rupees 10,000 remain unabsorbed, right? And this will be carried forward to assessment year 2013-14, right? In 13-14, again, the business income prior to depreciation is 80,000, right? Your depreciation is 30,000. This is for the current year, right? Less unabsorbed depreciation of 10,000, right? So entire thing is absorbed. You get an income of 40,000 under the head profits and gains of business and profession. Now income from house property, which is this one, is going to be 50,000 here. Since there is no more unabsorbed depreciation, we will not set off anything, and this 50,000 will come in the outer column. So the total income will be 50 plus 40, or 90,000. We have assumed that this income, this 50,000 number which is given to us, is after all the deductions, and therefore we haven't reduced anything specifically for them for repairs and everything, right? If it was given to you that, this is before standard deductions or municipality and all those things, then you would have considered those 30% deduction. But in this case, we have just assumed that 50,000 is after all the adjustments. It's a net amount in income from house property. So the way unabsorbed depreciation is set off is, first is, if it is for the current year, you set it off entirely against profits and gains of business and profession. Anything left, you set it off against other incomes, wherever set off is permissible. In this case, it was house property. If still you are left with something, that is carried forward for an unlimited period, right? And once you carry it forward in the next year, you can add it to the usual depreciation and deduct it. Okay. The point to be noted here is that if, let's say, instead of 10,000, this depreciation was 80,000 carried forward, or rather unabsorbed, the law says that this unabsorbed depreciation will be treated as depreciation for the next year, which means what? The total out of this 80,000, what is the income which is left here? The income which was left here would have been, let me use a different color, 80 minus 30, 50,000. This 50,000 would have been entirely adjusted against this, but still we would have been left with a balance of 30,000. Now the interesting thing to note here is that this 30,000 can again be set off against income from house property. Why? Because the law says that this amount is actually just added to the current year depreciation, and it is treated as if it is current year's depreciation, which means what? Which means that it can be set off against any other income as well for that particular assessment year.